Jerry Steffen with Joe Bert of Certified Financial Group, and we're here to discuss surviving today's struggling economy. And Joe, it is tough right now, isn't it?
It sure is, Jerry.
Well, our discussion will be on avoiding financial accidents in a market of chaos. What is a financial accident?
Financial accident is simply buying the wrong investment, and we see this an awful lot. What people do is they go to a seminar, they see something on television, talk to their coworker, their friend or buddy, and they try this investment, try that investment, and at the end of the day, they have a collection of what I call financial accidents, because they don't have a comprehensive plan.
Whether you have a retirement portfolio or not, how can you avoid a financial accident?
The best way to do that is to do some planning, and that's simply knowing where you are today and then trying to understand and figure out where you need to be in the future, how much you need in income, what you'll need in assets, and then put together an investment plan to get you there.
Okay, given the current market, is there a way to avoid a financial accident? I mean, planning is key, right?
Planning is the key, and the way to avoid it is simply to understand what you need to do to get there and then make the right decisions. Don't make a decision on what investment to buy, where to put your money, based on, once again, something that you may read in the newspaper or have gone to a seminar or seen on television or talked to a coworker. That's one of the worst things you can do, because you have no idea how it fits in your overall plan. What might work for you, for your neighbor, for your coworker, might be the absolute worst thing for yourself.
You have a story to tell about Herb and Dorothy?
Well, yeah, let me tell you about them. These are clients that came to me about 25 years ago. And he was retiring from one of the major companies here in Central Florida. And he was getting a pension, have some Social Security, and he came in by himself. His desire was to be able to retire, or when he did retire, is to buy a large motorhome and travel the country and see the country. And his wife was a retired school teacher, and she said, no way are we going to do this. She said, we've saved everything we can, we have enough money, we have the money in the bank, and I don't want to take any chances. He came to me and said, is it possible for us to do a plan and to at least show me and show her if it can be done? If it can't be done, I'll live with that. But if it can be done, I'd sure like to know. I said, the only way I can do this is if you'll bring your wife back in. And so I heard from him about 2 weeks later. He said, I finally convinced her to come in. So she came in with him. And for about the first half hour, she sat across the table from me like this. She didn't want to have anything to do with this conversation. After about half hour, 45 minutes, she finally opened up, and we got to talking about what needed to be done. And I was able to get all the information that I needed, and we proceeded to do a plan. And strangely enough, we did the planning for them and showed them clearly that there was no question they could buy the motorhome that they wanted. So he was happy, and she was somewhat convinced, because she was a part of the conversation, understood all the details and all the information that we needed. And they are now in their second motorhome, and they're still clients of mine. And if you're ever driving down I-4 and you see a big 40-foot motorhome behind you, and it has a license plate on the front that said, Joe said we could, those are my clients.
Do you have some other tough cases you can talk about?
Well, tougher cases are the clients that come in to see us that they're at or near retirement and haven't done any planning. They have no idea what they're going to need to live on. And the toughest cases are those that are maybe 5 or 6 years into retirement. And they have done what I call back-of-the-envelope financial planning. Although we're seeing some clients coming to us today that are doing this online planning. And they did the online planning and they figured they'd be okay, but what they found out is there's some extra things that they didn't factor in, like taxes, perhaps like inflation, or they misstated or misunderstood some of the questions, and now the wheels are coming off, and they can't understand why things are tougher than they thought they would be. So then, in those cases, we have to do kind of a reconstruction and get them back set on track.
So Joe, what's involved in the process for proper financial planning?
The process is very straightforward. What we need to do is sit down with you, first of all, and get to know where you are today. Okay. Where your income is, what your assets are, what Social Security might provide for you, if you're fortunate to have a pension, what that's going to be, and then look into the future. When do you want to retire? How much income will you need? What sources of income will you have? And then how conservatively can you invest your money to still get you through that long road that we call retirement? One of the worst things that you can do, and the things that, like I said, the toughest plans that we work on, are clients that start through their retirement years thinking they have enough gas in the tank to get them through retirement, and they get halfway through the desert and realize they don't have enough gas in the tank to get them through there. So retirement planning, financial planning is simply knowing where you are, where you need to go, and how much gas you need in the tank today.
Thank you, Joe Bert of Certified Financial Group. If you'd like more information or a free consultation, you can call anytime or visit financialgroup.com.